Good morning, good morning. How's it going, guys? Nice to have you. Welcome back. Friday morning. Beautiful. Nice sunny day outside. It's gorgeous. Hope you guys had a good week. Had a good week indeed. Very busy week today with price action. Very busy week. Up on my chart, I have a forecast that I made a few days ago regarding the S&P 500. And I was looking at the daily chart, and it was very clear to me that we had high odds that price was going to be rallying up right to this area here. Okay. And so today I wanted to discuss with you why I knew that. Why did I know that the S&P 500 was going to be rallying from 54.58 to 55.85? That's quite a significant rally. And if you're one to trade options, you could have made a really nice return there with some short-term options, call options, writing call options to the upside. So anyways, lots of opportunity here. But today I wanted to make this into a mini lesson just to kind of explain how it is that I knew with a high degree of certainty that price was going to rally from where it was here to the 55.85. Okay, so this was the forecast that I had placed on Twitter or X, whatever you want to call it. And if you wanted to see that post, you can see it on my timeline. Just go through S&P 500 posts, and you'll see that I made a reply to this actual chart that I posted on X. Okay, so anyways, welcome. I'm going to show you something pretty incredible. It's something that we teach at the school in a lot more in depth. So I'm not going to be revealing any major secrets here, but I am going to be showing you something extremely powerful. When we talk about the markets, we talk about, buyers and sellers. We have bears and we have bulls. And you often hear a lot of people say, well, the market is a struggle between buyers and sellers. And so it gives this perception that most traders are either buying or selling. And they're usually one group is buying against the sellers. And then sometimes the sellers are more stronger and they become more aggressive, and then they become dominant over the buyers, and that causes price to drop. This perception gives you this false idea that price can go anywhere at any time depending on what your average person is thinking. All right. And I think that's a false perception, because after years of studying the markets and looking at what's really driving price, what I discovered is that there's really one major force that's driving price. And if you're riding that force, you will do well. And if you are against that force, you will do poorly. And that one major driving force is the big institutions that are moving the market. And how do I know this? Well, it starts off as a theory, just like everything else does, or a hypothesis, and you have to explore, and you have to collect information, and you have to, examine the charts and see whether or not there's enough evidence to support the theory. And over the years, definitely 150%, this theory has been proven. And so we've been showing students this for quite some time, and proving that the theory is correct. And so when you look at the charts and you have this new way of thinking that there is one major driving force, and that's the big institutions that control price, then you can understand that if you can locate the areas where they are buying, then when they start buying from those areas, they will likely continue buying until they reach an area where those same institutions were previously selling. Okay? So this is the theory behind the supply and demand concepts. So if this idea was incorrect, then we would not be able to see this type of behavior on the charts. In fact, we would see more randomness, rallies coming out of nowhere, drops in price coming out of nowhere, and that's not what we see. So let me show you something very important here. So here is a weekly chart of the S&P, okay? Here is a weekly chart. And I'm going to go and get my pen, and I'm going to make a drawing here. As you can see, I drew a rectangle here on my chart. And this rectangle existed when price was here, okay? At one point, price was here, and I drew that rectangle. And this is what ended up taking place with price. Price rallied up. Now, let's just go back. Now, why did I draw this rectangle? Well, using the concepts and principles that we teach at the school, we locate buying from institutions. We're not interested in a little bit of buying coming in from retail traders. Retail traders don't move the market. There are moments in time in the market where retail traders can influence price action, but they don't move the markets. The largest institutions in the world move the markets. And, you know, some people could say, well, I get this asked all the time. Well, are you saying that the big institutions are working together? I don't have any proof that the big institutions are contacting each other and saying, hey, listen, why don't we just work together because we could make more money? But when I study the charts and I collect the information, you come to logical conclusions, which tell you that there must be some kind of collusion for price to be moving this way. There's no other logical explanation for it. And so when we were studying the charts, we came to the conclusion that big institutions were buying in this area here. And this is between 52.05 and 53.21, okay? There was significant buying here taking place from institutions. And so we've watched price rally up to all-time highs. Who do you think is going to push price to all-time highs? It's not me. It's not any other retail trader I know. It's not your average Joe on the computer at home trading the markets that are pushing price up this way. Somebody is pushing price up this way. Somebody is buying these markets. It's the largest institutions in the world. It's their money. It's their client money. It's the massive hedge funds that are colluding together. I mean, do I have proof that they're calling each other? No. But many times I've shared with you positions from Bill Ackman, positions from Warren Buffett, these characters who were always exposed to by the media as being incredible investors, incredible traders who do extremely well. It's just like incredible the knowledge that they have. When you see when they enter into positions, when they exit out of positions, more likely than not, they're always located at major institutional buying and selling areas. For instance, I told you about Nike, and I told you about how we had Pershing Square. Okay, Bill Ackman purchased Nike shares. And where did he purchase those Nike shares from? A massive institutional buying area. Okay, so what does that mean? That means it's very high odds that price over time is going to go higher because that area where he's buying it from is an area of interest by the major institutions that are looking to buy Nike stock. So when the major institutions come in and Bill Ackman comes in and they all buy at the same price, what do you think happens with price? It goes up. Now, regardless of what's happening with the company and the fundamentals of the company and their financial statements and all that stuff, if the big institutions are buying a stock, price of the stock is going to go up. All right. It's another thing that you have to understand when it comes to buying stocks in the stock market is that we tend to think, oh, we need to make sure that it's a good company and the numbers are good and the forward guidance is good and all that stuff. Listen, These companies can say what they want, report what they want, do what they want, okay? These oversight committees that are supposed to ensure that they follow rules, if you think they're legit, fine. I don't really put too much importance on those. If it was me or you running a company, we did something shady, oh yeah, they'd come down on us in a heartbeat. But these big corporations, you have to understand, they're very well protected in many ways that we don't even recognize. So they can report whatever they want. If big institutions want to accumulate shares of Meta, for instance, Meta is a perfect example. You remember Meta dropped to like $100? Yeah. Okay. Well, did you remember the news and the reports that were coming out regarding Meta at that time when price was dropping so low? They weren't looking good for the future of Meta. Well, why do you think that was? Well, big institutions came in and they bought Meta after it collapsed, after the bad news, the bad media, the bad reports. So this happens all the time. And then they all came in together and they bought the shares while everybody was dumping them. Look at Meta now and look at how high it is, okay? So when you start to look at the markets with a different perspective and not so much of a, there's average people who are bears and there's average people who are bulls, and the big institutions are there to help facilitate all of our trades. If you stop looking at it that way and start looking at it with a different lens, you'll start to see something different is playing out here. And you'll start to understand why price is doing what it's doing. So going back to here before I let you guys go, hit the like button on this video if you want to see more video lessons like this in the future. And if you do, if I get a lot of likes, I will consider doing that for you guys. We located this area as an area of interest for buying by the big institutions, okay? So price rallied up and it paused. We were waiting for it to drop. Drop where? Into this institutional buying area, because if price drops into the institutional buying area, what we're expecting is for price to go back up again. So we watched as price continued to move higher. It started to move quite a distance from that buying area. And then all of a sudden we saw some major weakness. We saw a bearish engulf. We saw price come down. And eventually it made its way down to that area of demand. Now I want you to see what happens here. Major spike to the downside. Do you remember what caused that major spike to the downside? Do you remember what the news was saying at this point? Do you remember how bearish? Sky was falling. Is this the time? It was major panic. Okay? And I was posting about this in Telegram. If you don't follow our Telegram channel, you have to follow our Telegram channel, because if you're wondering what's going on in the markets, I'm posting the narrative. I am posting the storyline that's playing out. All right? A lot of bearish media, a lot of bearish headlines. Price came down. I posted, this is an area where we should start buying. And I shared with members, I'm buying certain stocks. The movement of the market's going to be up after the significant buying coming in from this area of buying here. And it's going to be good to propel our stock prices higher. So I'm going to start buying into some stocks right now that are setting up for an explosive move. And boom, I bought those stocks and it's been nothing but upside. My portfolio is at all-time highs right now. Okay, because we timed it perfectly. So with this major institutional buying area coming into contact, we knew with a high degree of certainty that the momentum of price was going to be to the upside. And when examining the charts to determine where price was going to stall, where price was going to finish this momentum, because the momentum is strong until a selling area comes into play. Well, today that selling area came into play. So watching today, watching next week, I want you to be informed that the pressure was to the upside, and now we just contacted the selling area. So I would not be surprised if today we see price stall, which is already starting to do, and then we start to see a drop in price take place. Okay? And that's it for you today, ladies and gents. Hope you enjoyed it. Hope you enjoyed this lesson. Hope it gave you some insight or a different perspective. That's what I'm hoping to bring you guys here as we go down this path of trading the markets together. I've been very successful looking at the markets this way, and it's because it's based in reality, and I hope you one day get to see that for yourself. So stick along with us, hit subscribe on our YouTube channel. Make sure you follow and set notifications on our Twitter page so that you get all of our comments and analysis. And we'll see you next week for some more lessons and some more analysis on the markets. All right? You guys take care. Enjoy your week or weekend, and we'll talk to you soon. Take care, everybody.